Florida, known for its palm trees, golden beaches, and glowing sunsets, has long been the image of the American dream. But beneath the tropical charm, a ticking real estate time bomb is quietly gaining momentum. With surging insurance costs, rising HOA fees, and waning demand, some of Florida's most desirable housing markets are showing signs of deep cracks. What once was paradise could soon become a financial nightmare for many homeowners. The hidden costs of sunshine living. Imagine paying $10,000 a year just to insure your home, or watching your property value drop faster than the tide. This isn't a short-term dip. Florida is facing a long-term correction. In this breakdown, we explore the top 10 Florida cities most likely to crash first in 2025. Number 10. Fort Myers. Fort Myers, once a hidden gem, saw a population boom during the pandemic with over 23,000 new residents a year. But in 2020, the shine is fading fast. Homeowner insurance premiums have skyrocketed by 245% since 2020, with many paying over $7,300 annually and flood zone properties exceeding $10,000. This spike follows Hurricane Ian's devastating blow in 2022, which caused over $112 billion in statewide damage. Insurance companies fled and remaining providers drastically raised rates. HOA fees have climbed as well, from around $350 in 2020 to $600-$900 today, driven by disaster reserve funds and stricter building codes. Meanwhile, inventory has soared by 54%, pending sales are down 27%, and homes now sit on the market for an average of 47 days. Migration into Fort Myers has slowed by 22%, and nearly 38% of listings have slashed prices. Number 9. Miami. Miami still sparkles with oceanfront views and vibrant culture, but beneath that glamour, warning lights are flashing. The median home price has jumped to $620,000, up 45% since 2019. Insurance costs in Miami-Dade County now exceed $10,200 annually, with flood insurance pushing totals past $14,000. High-rise condo HOAs in areas like Brick Hill now charge $800 to $1,400 per month, often due to strict post-Surfside inspection laws requiring structural repairs and reserve funds. Migration is reversing, with 28% fewer inbound moves in 2024. Inventory has risen 51%, and 35% of homes are seeing major price cuts. Miami may still be beautiful, but buying in 2025 comes at a premium. Number 8. Sarasota. Once an artsy beach town, Sarasota exploded in popularity, with home prices nearly doubling to $535,000. But the cracks are showing. Average insurance premiums now top $7,400, and many waterfront homes exceed $11,000 annually. HOA fees have surged to $500, $850, reflecting new state regulations post-Surfside. Migration into Sarasota dropped 17% in 2024, while inventory rose 46%. Homes linger on the market for 39 days, and nearly a third of listings are cutting prices. Sarasota may still be charming, but its real estate market is heading toward turbulence. 7. Northport. Northport was once a haven for budget-conscious buyers, with a 22% population surge from 2019 to 22. But today, insurance costs are climbing fast, averaging $6,800 a year, with flood coverage adding thousands more. HOA fees now range from $200 to $450 per month, up 35%. Net inbound moves dropped 19% in 2024, and vacant home inventory spiked 60%. Builders are now offering deep discounts to attract buyers, as 34% of listings cut prices and homes sit for 45 days. Investors are bailing out, turning Northport from a growth story into a warning sign. Number 6. Jacksonville. Florida's largest city saw a surge in new residents during the pandemic. But by 2025, Jacksonville is feeling the squeeze. Insurance premiums have jumped from $2,000 to nearly $6,900, with flood zone homes costing over $10,000 each to insure. HOA fees in popular developments have more than doubled, often now $400 a month or more. Inventory is up 52%, while pending sales are down 18%. Migration has slowed significantly, with 28% fewer people moving in, and the rental market is softening. Jacksonville's mix of rising costs and shrinking demand puts it on a path toward market cooling. 5. Deltona. Deltona was once a budget-friendly alternative to Orlando, with median home prices of just $235,000 in 2020. Now prices have climbed to $375,000, while insurance costs have ballooned to $5,900 annually, with flood insurance adding up to $3,000 more. HOA fees have increased to $250 to $500 a month, and inbound migration dropped 25% in 2024. Foreclosure rates have increased 11% year over year, and nearly 36% of listings have cut prices. Deltona's affordability advantage is fading fast. Number 4. Cape Coral. Once a boom town, Cape Coral is now facing serious headwinds. Insurance premiums average $7,800, with older or flood-prone homes exceeding $11,000. HOA fees have doubled in many cases, with condo owners hit by massive special assessments to meet new safety laws. Inventory is up 58%, and homes linger for 44 days, with 40% of listings cutting prices. Even rental demand is declining, with rents dropping 6% year over year. Cape Coral is beautiful, but increasingly unaffordable. Number 3. Lakeland. Lakeland thrived as a midpoint between Orlando and Tampa, but the surge in home prices, now $340,000, up 80% since 2019, is being undercut by rising insurance costs, now averaging $6,400. HOA fees have increased to $200, $450 a month. Inventory has grown 44%, and pending sales are down 21%, and 33% of listings are offering price cuts. Migration slowed by 27% in 2024, indicating buyers are looking for more affordable, less risky areas. Number 2. Orlando. The magic in Orlando's market is fading. Home prices are up to $445,000, but insurance has exploded to $7,800 annually, and even higher in older neighborhoods or flood zones. HOA fees in some areas now exceed $900 a month, and special assessments are adding financial strain. Inbound migration has plummeted by 30%, and inventory is up nearly 50%. Over a third of homes have reduced prices, particularly in overbuilt suburbs. Orlando's boom may soon give way to a significant bust. 1. Tampa. Tampa, once Florida's real estate crown jewel, now leads the list of crash candidates. Home insurance has soared from $2,300 to $8,200, with flood coverage pushing costs over $12,000 for many. HOA fees in some areas have more than doubled, and special assessments are triggering resident exits. Inventory has climbed 58%, pending sales are down 25%, and more than 40% of listings have cut prices. Migration is down 32%, and even rents are dropping. Tampa still offers beaches and sunshine, but financially the cracks are widening. Conclusion. A state on the edge, from Miami to Tampa, the Sunshine State's real estate market is under pressure like never before. Skyrocketing costs, stricter regulations, and cooling demand are converging into a potential housing correction. While Florida will always draw attention for its beauty and climate, 2025 could be the year when its most popular housing markets face their biggest test yet.